Where did that name come from, man?
And we learned about the launch date roughly one day before. And then I messaged my co-founders and go, fuck.
And when did you learn that PENGU was dropping on Solana? And what was your first reaction? Welcome back to The Roll-Up, your home for technical talks and open conversations that shape the modular future. Nothing on today's show is to be construed as financial advice. You can see our full disclosures list at therollup.co/ventures. Sit back, relax, and enjoy today's episode after a quick word from some of our awesome partners.
Imagine if the world's GDP moved on chain. Guys, say GM to SafeNet. The newest protocol by Safe isn't a blockchain and it's not a new layer 2. It's a transaction processing network built to send money anywhere and swap anything on thousands of layer 2s from a single universal balance in sub 500 milliseconds. It's fast, it's smooth, and it's simple. And it's built with safe multi-sig level security in mind. SafeNet unlocks smart accounts across multiple chains, allowing users to supercharge security, scalability, and speed. So get started today at net.safe.global and remember to follow @safe on X.
What's going on, guys? Welcome back to The Roll-Up. Today we have Mertius Prime on the pod.
Mertimus.
I don't know. Mertimus Prime. What the hell? Where did that name come from, man?
I don't quite remember. People like to make derivatives of my name Mert because it's just it's one syllable. And some guy called me Mertimus Prime or Mertimus Decimus Meridius or something Roman or Transformers. So I just go with it.
Nice. Yeah, man. Thanks for joining. It's your first time on. We've been infamously a modular podcast, but we've came to learn that the whole world is modular and that the idea of modular is really just kind of a marketing meme pinned up against the monolithic, as you could say, Solana. So we'll talk about that, but we're definitely not going to make this into another modular versus monolithic debate. I think we have a lot of agreement actually on ideas about kind of how to scale the ecosystem and kind of where we align. But before we get into the tech stuff, man, like, you're Canadian. My parents are Canadian. I'm Canadian. I also dropped out of college. I went to the University of Florida for 2 years, started an online business, just dropped out. You dropped out as well. So, I mean, that was a really weird time back in my life. I mean, I was leaving university, something completely different, feeling anxious, feeling like, I don't know if I should do this, like just that whole path. And I mean, I'm curious about your story with that. Like, what was your experience going through university and then dropping out? What did your friends support you? Like, how was that experience for you? And how has it shaped you? Because I know it's shaped me.
Yeah, mine is slightly different because I finished undergrad. I dropped out of grad school. So I went to a school called Queen's University in Canada. And it's a pretty small one, but also had some solid crypto talent. So my friend Lucas Manuel, Charles St. Louis, for example, are some of the earliest people in Maker. And my co-founders for Helios, Nick and Liam, they also went to Queens. In fact, Liam was my roommate for 5 years, and Nick was also in the same program we did. And that program it's called Apple Math, but it's applied math and a double in computing communications engineering. And communications engineering is basically signals analysis, radios, stuff like that, control theory. And I went into that because I didn't know what to do. In Queen's first year, it's a general engineering program and you don't have to pick a discipline. I actually wanted to be a civil engineer at first. And then I was like, you know what? I'm going to be a theoretical physicist. And so I just did math because I thought that would help it the most. But also the engineering side would help you with instrumentation and things like that. And that was going well. I was always aiming for like perfect GPAs and stuff and getting them. And then I did an internship at BlackBerry on the cloud infrastructure team. And this was the cloud responsible for supporting BBM, where all those messages back in the day used to happen. And that was a lot of fun and much more fun than school. And so when I finished that internship, which was roughly 13 months, I came back and I was like, fuck school. I'm just going to ship stuff and focus on business and commerce. And, whatever, I can just read books to learn about physics if I really want. And so I did that. and then graduated, worked at a bunch of big banks in Canada and startups. And then I had like this, I really wanted to get into drones because I was like, the future of warfare. I don't know why I was thinking this, but
Dude, that is such a pressing topic right now as well.
yeah, I was like, as a kid, I used to always do this, which is like, okay, what's going to be really popular in the military such that if I mastered it now, I would be useful in the next 10, 20 years. And roughly 4 years ago, I was like, okay, that's probably drones and robotics. So I got accepted into Georgia Tech Masters in Robotics. And I did that for a little bit. And then I was like, this is so depressing. Like, this is not how you learn. I just want to ship shit and whatnot. And then I was still working on my day job, which is a startup that does fintech. And one day there was I was responsible for building a payment system to go from Canada to Australia. And it was super inefficient. It had to jump through like different jurisdictions. And basically I said, why not just use crypto here? Right. Because I was already familiar with crypto the whole time. And they said it was a scam. And I did not like that answer. And so what I did was like, okay, I'm just going to join Coinbase, which was hiring at the time. And I was roughly their first or second Canadian hire. And while I was at Coinbase, I was like, okay, if I really want to master crypto, I can't do both crypto and robotics. So I just dropped out of the master's program.
Did your parents or anybody close tell you to stay? Were they at all disappointed? Because on my end, my mom was like, no, you got to stay. I mean, I was undergrad, right? It was a different story. I was 18 when I dropped out. And then my dad was like, nah, dude, fuck it. Like, just floor it, like, no, like, just, if if it doesn't work out, just go back.
Yeah, I didn't really. So my mom passed when I was young. So I have my dad. But the thing with my dad is that he dropped out of the one before high school. I don't know what it's called in English, just elementary school, grade school. He dropped out of that at like 8 years old, and he just started hairdressing. Like he's been a hairdresser since 8 years old. And so he definitely, whenever he tries talking about school, I'm kind of like, Dad, shut up. Like you didn't even go to high school. And so he didn't care. He just had trust. So it wasn't as bad for me.
Yeah. It's different. It's different when you get through undergrad. Well, cool, man. Yeah, I think I always appreciate people who are able to kind of take that leap. I think there's something different between those who leave school behind in terms of entrepreneurship. I'm not sure if it's like a back against the wall thing or like you've kind of erased part of your plan B. But it definitely kind of inspires people to act in a certain way. And I mean, we all know some of the famous entrepreneurs in the world are dropouts of jobs, universities, high school, etc. So, yeah, man, let's get to the meat and potatoes of this conversation. Starting off with PENGU. I'm a Pudgy Penguin. Disclosure, I've been invested since like 2 years ago in the seed and been actively helping the team and all that good stuff. And your PFP is a PENGU now, which is a really sick PENGU, actually. So what is your first reaction when you learn that, and when did you learn that PENGU was dropping on Solana, and what was your first reaction?
I learned about it probably a few months ago. And at the time, I believe Luca was still evaluating his options. And it was middle of the night for me, like 2 a.m. And he's like, Mert, and he had talked to somebody else from Solana Foundation, Pedro. And he was like, so we're thinking about doing this. Like, do you have some time either next week or now? And I was like, sure, fuck it. And so we jumped on a call. And at first they were debating like whether to launch on Solana or not. And like, if you do it on Solana, what do you need to do to ensure success? Like, who do you talk to? All these things. So I helped them with, some introductions, ideas on who to airdrop to, obviously the infrastructure with Helios and all these things. And I was pretty impressed with how fast it came together. And I was talking to Luca about it, and he's like, wow, like this is how you guys do stuff on Solana, which, to reference how speedy everything was. And because like we shifted plans a few times, it was going to use ZK compression at first. And then it was like, okay, wait a minute, like but you need to link the ownership of a penguin on Ethereum. And so a claim might make more sense. Do we do this in 2 phases? Oh, wait, Jupiter doesn't have support for ZK. Okay. So then we were like, wait, should we get support for ZK from Jupiter or talk to Phantom? And so there was a lot of missing or moving pieces. And it came together pretty fast. And then, yeah, it launched, what was it, 2 days ago now? And it was very chaotic at first. There was a lot of things that went wrong on multiple fronts that we can talk about, but overall turned out well.
Yeah, I think that some of the people in the community were curious as to why they didn't wait for abstract. But I think now that mainnet is what, like at least a month out or so, they wanted to get this out. And then also, I mean, the beautiful knock-on effect is that these communities kind of come together, right? Like, I don't think you'd be rocking a Ethereum NFT, bro. Like, that's just, I don't think you would ever do that. But then now it's like, you know what, the Penguin just makes sense. And so like these small things, right? I think they make a difference in like unifying people broadly, which I'm excited about. I actually haven't even claimed. I'm a believer. I'm not a Jeter on day 1
Same.
or 2. But I like, the reason I didn't claim was because like everyone was struggling. So like, what happened there? Like, I saw your tweets. You were going on a rampage about it. Yeah, I mean, I think some of the modular guys are framing this like, it's just another example of Solana's congestion problems, and like this thing's not going to be able to scale. Like, what happened there from a technical perspective? And is this something that Solana community needs to be concerned about, or could it have been optimized better? What happened?
Yeah. So, well, first, actually, to tackle your point on like some people were wondering why this wasn't launched on abstract. I think that would have been very dangerous, that you just launched this L2. It hasn't been battle tested yet, and now you're giving it a huge event. Like, it could have just broken it or got the fees super expensive before the team really had time to iterate, and it might have given off a bad first impression of the chain. So I think it actually is smarter to do it on a different chain first, because you can just bridge to it. In terms of what happened with the claim, yeah, so I know basically everything that happened here in rough sequence. So first is that the clusters API, which is what you needed to, it's just a Web 2 API that actually, I believe, got DDoSed, or it basically just broke. So it simply wasn't working for a while. MetaMask marked the site as suspicious or as phishing. And then, so those were like 2 pretty big ones. And then obviously they were getting DDoSed. And then there was also some things that weren't communicated properly on the front end. So like for larger penguins or like larger allocations, the transactions were split into a few transactions. And so then people would be like, wait a minute, this doesn't show my full allocation. Well, it's because not all the transactions happened yet. And so there were some UI things like that. And the Solana specific issue is roughly, and I tweet about this, is it's basically just like, what happened is they're obviously not Solana devs, right? They're not SVM devs. They're coming over from Ethereum, and I think they roughly started the Solana stuff like 2 days before the launch, which I was like, guys, please, let's pick it up here. Like, we're happy to do dry testing and all this stuff. And we learned about the launch like date roughly 1 day before, and then I messaged my co-founder. I was like, "Oh fuck, get ready for some trouble." And like, we were asking for their code. Like, we're like, "Okay, we'll just write the code for you and stuff." And we never got to do that. But roughly what happened is twofold. One doesn't have to do with the blockchain, which is on Solana to, add that screen where you have to connect your wallet and then pick the right wallets. It's just a simple SDK. It's the Web3 wallet connector. And I believe they didn't set that up correctly. So only Phantom worked, but then like Ledger didn't work, Soulflare didn't work, Backpack didn't work. And if you try to connect with those, you would just say auth error. And people thought this was like a Solana thing, but like when you just connect your wallet, the blockchain hasn't been initiated in any way yet. That's just a pure wallet interaction. And that's just from the SDK. So that, and I think that's still broken if I'm right, unless you use Phantom. And then, okay, the second one that's more chain related is block transaction expired errors. Okay, so this is an interesting one. So the way it works on Solana is transactions have an expiry date. because you fetch the latest block hash and then you use that for your transaction. And then within like a minute, it'll expire. So if it doesn't get accepted within that 1 minute, it's not going to work. Like it'll just expire and you'll have to reconstruct a transaction. And the way also it works on Solana is there's parallelization. And there's also the concept of compute unit limits per the block, which is kind of similar to gas on Ethereum, but obviously different. So the way it works is there's a block and you can fit 48 million compute units into it. Okay. Each transaction consumes a certain amount of compute units, right? So a very, very simple transfer might be very few compute units. A very complex one, like a Jupyter aggregation routing through multiple dexes, might be much more complex. And so, but then the other thing, and this is the important part here to understand, is that since Solana is split into multiple different accounts, right? So maybe there's a Penguin account, there's a Jupyter account, all these things. There is a smaller limit per account, right? So there's a 12 million compute unit limit that you can write to on any given account. And so you take that, there's a 12 million cap, and then you take the fact that when they were constructing transactions, they were not setting the compute units properly because they had 1 day to write the code. So they would request the max possible compute units for the transactions. So in this case, it was 200,000 compute units. And then there was 12 million available because they didn't like shard the account structure properly, because they just didn't know, right? It's not like, and perhaps that's like the knock on Solana that I think would be pretty fair actually, which is that developing on it is just harder, right? Like this isn't like very obvious stuff. You need to really read the docs and work with somebody to understand this, but like they just didn't have time. And so what ends up happening is you have 200,000 compute units trying to fit into 12 million compute units, and that equates to like 60 claims per second. And since you have, let's say, a few thousand people trying to claim all at the same time, obviously some of those don't make it into the blockchain before they expire. And so we saw this as they started the launch, and we were like, oh shit, these guys are oversetting the compute units by like 6x. And so we gave them the code sample to fix it. And then they were also not like setting fees properly. And then the third thing was they were not retrying the transactions. So on Solana, if you send a transaction, it doesn't get accepted, you would retry it, but they didn't have that knowledge. And so once we added those three things, which was hard because they were also fixing like 1,000 other things that weren't to do with Solana, then you saw their landing rate increase to 100%. And so I think like a good criticism of Solana there would be the developer experience is complex. And this isn't something that just works out of the box from just using the SDK. And you need to actually work with people, ideally for like, a week or something before launching. And so that's what happened.
Yeah, I mean, okay, so lots of kind of unpack there. But just to kind of finish off the lore then, so you guys were able to then provide them with this code sample with the updated fixes, and then they were just able to plug that into like the repo and then press live, and then from that point forward, it was good to go.
Yep.
Got it. Okay. And that was about like maybe an hour or two after the launch.
So we gave them the sample a while ago, but they were just getting bombarded by like, hey, MetaMask is phishing or claiming you're compromised, and like 5,000 other problems that they had. And so I was like spamming Luca, like, dude, like you need to prioritize this one so that your transactions can land. And after like, I didn't look at the clock, but probably like 2 hours or something, it was added. And then once it was added, it was fine. Yeah.
And so, okay, so to your original point, and then we'll kind of get into the architecture of the blocks a bit, because that's a particularly interesting point there. This could have worked for a different use case with some sort of like ZK compression, network extension concept, if there was a better, if Jupyter supported that. So basically at the current state, Jupyter does not support, Jupyter Dex aggregator cannot support network extension operations, or like basically why could this not have worked out? Like why can't Jupiter support ZK compression for this claim? I understand that we had to link to an Ethereum wallet, so that was part of it. But like strictly on the Solana side, is that something that Jupiter just needs to implement, or like how does that specifically work?
I mean, Jupiter can easily implement it. It's just not like priority. Yeah, the biggest thing was obviously you have to prove ownership of a penguin on Ethereum, and then you get so like it would have been two different kind of code paths that you had to build that are different, and so that would have been confusing for the users. But then they also wanted to cover the cost for the users, and they also didn't have time, right? Like doing this. Like, okay, so if they had, let's say, a month to plan for this could have been all worked out super efficiently and all this, but they had like a few days. And so that's actually the main problem. And then the rest of it is kind of just like downstream effects of not having time, right? Like if you, first of all, you wouldn't have structured a smart contract in that way. But even if you did, you would have optimized the transaction sending unit, which also didn't happen. But then let's say you did both of those, then you still have like some rough systems design math there, right? Like assume you're going to get 5,000 claims per second, assume Solana does 3,000 transactions per second at peak. Then the 2,000 people that are excluded from that, what's going to happen to them? And so what you would do is something like a queue system where you would put them in like a queue and then actually add durable nonces to the transactions. Or you would do a regular airdrop, right? You would take a snapshot, you would have these addresses, and then you would just use, so Solana has like a Merkle tree distributor or ZK compression to just knock those transactions out. And that's what like Jupe did, that's what Jito did, and that's what all Solana teams do, and that's why those go well. But the result of like an EVM team coming over to Solana for the first time and trying to learn it right away, I think it was just too chaotic of a combo.
Yeah. So then, is there a clearer use case then for like these network extensions or ZK compression for these highly targeted events with when there's going to be a lot of on-chain transactions? Or are you still of the mind like, no, let's just all put these on the base layer. The base layer can handle it. We just got to build it right.
Well, so network extensions is certainly an overloaded term. And I hate that term personally.
Yeah, I'm trying not to call them rollups to not piss you off.
For ZK compression, it's the execution, the transactions are still done on the L1. The only thing that's different is that the state availability is hashed together into the latest kind of account hash that you linked. And so to replay data, for example, you would replay the ledger, right? So like something like call data on Ethereum. And with ZK, the thing that ZK compression helps with on Solana, which is, so this concept doesn't exist on Ethereum, which is why it's like hard to make sense of, which is that Solana has additional rent costs for storing data. So let's say I want to send you a token right now, and you just came over to Solana and you don't have any token accounts, right? You just have sold the main coin. But let's say I want to send you USDC. Well, if I want to send you USDC, but you don't have a USDC account, I need to pay rent so that I can allocate a USDC account for you. Now that rent is refundable, meaning that once that transaction is done and that account is empty, I can close that account and then get the money back. But like that's an additional cost, and it doesn't matter for one transfer, but if you're doing 10 million transactions, then you're not only paying for 10 million transaction costs, you're also paying for 10 million new account costs. And so what ZK compression does is it condenses all those accounts into one account so that you're only paying the account cost once. And so you're able to save a ton of money, but the execution is still done on the L1. Like the transactions still happen on the L1.
Got it. Cool. I mean, all in all, post that little hiccup, the quite a successful launch. I mean, tokens trading quite high, obviously, in terms of FDV market cap. Also a significant amount of float, which I thought is particularly exciting because, I mean, it's just a change in what we've seen. And then I imagine for Abstract, what they're going to do is just use like a wormhole or some sort of like native token transfer and just basically put a liquidity pool there. And the two homes for people will be on Solana and Abstract, and maybe even Ethereum L1. But like for all intents and purposes, man, each time that I've onboarded somebody this holiday season, I've just been sending out everybody like $100 in fart coin, and they think it's like the greatest thing since sliced bread. And it's like, yep, download Phantom, sign in with your email, and here's $100 of fart coin. It's like the easiest onboarding ever. So I think the thesis for PENGU coin on Solana, as far as like the proliferation, is working. I think there's already 500,000 holders. So yeah, I'm curious if you have any comments on like the overall tokenomics there. Maybe that plays into a broader shift of like these, venture-backed projects, or just kind of any closing thoughts on what you expect for PENGU, for the token, for the community on Solana, and just kind of like broader takeaways outside of kind of the slight tech hiccups.
I didn't really look at the tokenomics too much. I know Luca wanted to make it super fair and actually get a lot of people involved and not do anything predatory. Like that was a big focus for him. And so that's obviously, and he also, obviously he's a product thinker. Like he doesn't care, okay, about religious things. He cares about like, okay, where normies, where can they go today? And one of those things, and top two things, let's say, is Solana, along with perhaps Base. And so it's like, okay, so that seems like it was a thesis. And then what it means, I haven't claimed mine. I do like the Penguins quite a bit, and so I don't plan on selling unless like it just goes really up, and I'm like, okay, maybe I'll take some profit. But I think it's a good unifying force. I actually really like the Abstract team, for example. Actually, like roughly everybody on their team that I know, I already follow them, right? Like Jared or Saigar or whoever else. So I like the way they think, and I think we need more of that thinking. And so that's probably also another reason for launching on Solana, because it's a relatively similar philosophy in how people think about users and experiences.
Which is a good segue into another shift, which is we did a pod with Max Resnick in Bangkok, talking a lot about the Ethereum roadmap dilemmas, things of that nature. And I think a lot of it stems down to some of the points that you're making here with regards to being product focused versus, ideologically focused or aligned. And I think so. Solana's done a good job of building this in increased bandwidth, reduce latency product ideology. And so I just want to kind of like touch on your first, I think it's maybe been a week or something, but I'm sure that they've been working with Max for several weeks or months now. What does Max coming over to Solana building Anza mean for the community? And like, what is Anza trying to accomplish that's going to help you guys with Solana and with Helios?
Yeah, so you can roughly think of Anza as consensus, but on Solana instead of Ethereum. And Max, actually, I had him on Lightspeed this morning. And what he is working on, I believe they called him like lead economist or something. So that's a fun title. And there's a few things that he'll work on. And those range roughly from defining consensus properly to better fee markets to MEV, and then perhaps like dynamic issuance, or if issuance changing actually even makes sense. So things along those lines. In terms of what Anza does, it's they maintain the validator client, that's the Solana Labs client, or it's called Agave now. And it's an interesting dynamic because so FireDancer is coming out soon, and that'll be the second client. And it's a contrast to Ethereum, where you have, I believe, 4 clients, or maybe even 5, but I think 4 evenly split. Versus on Solana, it's more like you have 2, and then those 2 kind of compete with each other almost. So one of the things that one of the narratives that's been pushed is like, well, once FireDancer comes along, it'll be a million TPS and everybody will switch to it. And so what's used for Agave? But that's actually not correct, because the Agave team is extremely talented, and they will compete to keep up with FireDancer, and they might even do a better job, honestly. So like they're already raising block limits. They already just set up a research team as well. So you're going to have kind of this nice little competitive dynamic of like both clients trying to improve against the other one. But then you also have the nicer peace of mind where the likelihood of a bug occurring on both their clients at the same time, because they're in different languages and all these things, is low. So like you have better decentralization and security and redundancy, or just peace of mind. And yeah, so that's roughly what. And then Anza does other things, like they also work on specific SVM stuff, like SVM APIs, research, ZK, stuff like that as well.
Yeah. I mean, I think that that like concept of just the competition between the two clients, and then also just fighting it out to deliver the best performance, is pretty aligned with Max's idea for Ethereum as well. I think the Justin Drake presentation might have sent him over the edge, but I think it was he was already bubbling up based on our podcast in Bangkok. I also just think that culturally speaking, Max and others, there seems to be a strongly different culture in Solana than in Ethereum, in Celestia, and Bitcoin. Like product focused, very very application oriented, and so I think that actually made it for a good fit for Max per se, because Ethereum kind of is in between a rock and a hard place, kind of, right, where there's a lot of infrastructure that's been funded and there's just been this creation of new problems that is then solved by more infrastructure that is basically creating more problems. But I think that like there's clearly a difference in where the scalability comes from in these two ecosystems, and I want to talk about that actually with Celestia and even Ripple to some extent. But just let's nail down this increased bandwidth, reduce latency concept. We have Sonic has just launched on mainnet, 10K TPS, I believe, on EVM is what they're claiming. Monads pushing the EVM both in these parallelized, highly functional databases using like REF and customized DBs. Solana is all in on this increased bandwidth, reduce latency idea. So let's talk about what that means in the immediate term, and then looking forward with the additional client of FireDancer and beyond. I think it's very clear that people are in agreement that, okay, if you want to onboard people, you bring them to Solana. It's very fast. It's cheap. It works. I believe that if you want to get Solana to a maximum scale where you want to take this thing, obviously we need to scale it further. There's trade-offs that happen here. And so I'm curious, like, what is the right mental model for, okay, understanding Solana's vision for where it is today and now and this purpose that it serves? And then what is the vision for down the line, 5 years, 10 years and beyond, where we need to accept trade-offs, or at least acknowledge them and build towards a more censorship resistant and kind of maximally decentralized ecosystem while maintaining this core vision. So what is the here and now? Why is this so important for you guys? And then what is the kind of 5 to 10 year trajectory do you believe looks like to kind of keep this vision intact while also navigating some of the trade-off space?
Well, everything roughly starts with Tolly's idea of NASDAQ, decentralized NASDAQ. Now, it's a silly saying because it's like, if you take it literally, it's a ridiculous concept. But it is a good heuristic or a mental model for what you want it to somewhat look like, which is to say that if you have markets on chain, and if you believe that crypto or blockchains enable global permissionless markets and real-time price discovery and the facilitation of value and how it moves around the world, then it just turns out that if you optimize for syncing information as fast as possible around the globe on kind of one machine, or one state machine, not one literal machine, then as a byproduct, you also get other things like lower latency and increased throughput, which tends to be better UX for people. But everything comes from that core concept of just syncing information as fast as possible around the globe, including censorship resistance, for example, right? And real-time censorship resistance, that is, right? Like if you spin up a node and you send transactions, and the blockchain's job is to duplicate that as fast as possible around the world, then that gives you a lot of censorship resistance to begin with. Now, of course, it's not perfect. There's a lot of the way that I've heard this, and I used to say this before I discovered that actually the former CTO of Coinbase, Solana, said it, who's Greg, is like, I always thought about it as more of like an engineering versus science approach, where like, so both can work, right? So you can do science and you can, conduct experiments, you can do some peer reviews, and you can kind of work your way upwards from there. That approach works. Or you can do it the engineering way, which is like, you ship something, you get feedback. Once you get feedback, you iterate, and then you have new kind of directions open to you. So one approach is, one example of this is like, when Solana launched, it didn't have fee markets, right? Not quite sure why, but it just didn't. I think they like really rushed the launch. Like most of the parameters were even just straight up set from Cosmos. Like the inflation schedule is just straight up copy pasted from Cosmos, because some of the earlier validators were Cosmos validators. But it turns out that if you do it the engineering way, there's some trade-offs, such as like short-term, let's say, reliability issues, which was very common in 2021 and 2022. But actually, since fee markets and Quick went live, it's been almost 2 years now without an actually performance-related outage. There was one outage in February of this year, and that was like the silliest outage ever, because it was already something caught on testnet and everybody already knew existed, and it was just like a matter of DevOps of getting it deployed. But like, if you look at the performance characteristics, nothing has has actually affected the chain since. Now, I think it will in the future, but it hasn't in that 2-year time span. And so in terms of what it looks like today, so very simply put, it's not really about increasing transactions per second. Like TPS is just an easy to understand metric, and it can be used as like a good North Star if you say something like 1 million. But the actual idea is always composable global capital markets, right? That doesn't sound as succinct as decentralized NASDAQ, but that's what it is. And those markets can be, shitcoins, but they can also be RWAs, they can be stable coins, they can be Sol, they can be DePIN coins, they can be anything, right? It doesn't matter. The network is not opinionated about that. They can be JPEGs. And as you kind of work through that vision, you start noticing a lot of issues in production. So one of those might be MEV, for example, right? And then, okay, so what's the long-term fix for that? Well, it's probably something like multiple concurrent proposers, right? Where you have a bunch of different leaders around the world, and then you have competition amongst the block leaders. And obviously, as a user, you now have multiple options as a leader, and you can pick the one that's not malicious. But that also has the other effect of reducing latency, right? Because now your transaction doesn't have to go from Singapore to New York. You can go from Singapore to Singapore, right? Because there's maybe a leader there. And, we can get into the blockchain trilemma and whatnot, and why I think it's generally a super outdated model. But fundamentally, there's a lot of engineering problems that are just not being looked at, like bottoms-up optimizations. And it's not just about, one of the biggest misconceptions is, well, Solana just tuned up the hardware requirements. And it's like, well, EOS did that, Binance Smart Chain did that, Polygon, everybody has done that, and they did not get close to Solana's scale. And that's because that's not enough, right? In fact, if I'm to put it succinctly, Solana's actual design principle is informed by Tolly's years of working on phones and phone operating systems, right? So how do phones work? You, let's say, optimize this chip and the software that goes with it. And by the time you release it, there's a new phone that came out, and now you have to rewrite it again. And then there's a new phone that comes out, and you have to rewrite it again. There's a new chipset. There's always that. And it's a similar concept to blockchains, which is to say that the goal of Solana is not to jack up hardware requirements. It's to write software in such a way that it gets out of the way of hardware, right? The end state of Solana, what that looks like, is And like when people say you just add hardware and the chain scales, that's not how it works. The second you add hardware, there's like 5,000 different new bottlenecks that arise. That's why you can't just do that, right? It's even comparable on Ethereum. You can't just, boost the shit out of the sequencer because, okay, now you're bottlenecked on DA, right? So there's always different components. And so the question becomes, how can you get to such a state where the only thing you need to do is, if there is market demand for this block space, let's say it's 2 million TPS, can the node operators actually just go on Amazon, buy a new RAM stick or something, and then actually meet that demand? And the economics should make sense, obviously, right? The cost that what you make from handling that extra demand actually offsets what it costs you to set up that node. So it's a little confusing, but write software so that it doesn't get in the way of hardware is the actual design principle.
Yeah. Okay. So, in the immediate term, we have Fire Dancer rolling out as a second client, and we have clearly an ecosystem that is functioning at scale. I mean, there's been no other ecosystem that has generated the amount of transactions and user activity in terms of either meme coins or trading or whatever it is, DeFi, since the inception of all this kind of on-chain work than Solana in the last year or so. That's not really what I'm concerned with. Like, I get it. Like, we can get this thing to really high levels of scale for the current user base, but we're also entering like two separate propositions for Solana at the same time. The first one is AI agents. In a world of an agentic on-chain reality, these agents are going to be able to push more transactions and at a larger scale than I think any of us can even imagine. So while I think that there might be an oversupply of block space now, I think we'll see chains that are fully dominated by agents, and I expect to see AI agent transactions happening on Solana in mass in 2025. Then the other element is like kind of comes back to like maybe like something like PENGU. Like if PENGU gets to a point where they're onboarding, hundreds of thousands of people on a daily basis or a weekly basis, monthly basis to Solana to trade, that combined with a bull market, combined with a agentic future, I'm struggling to see how we scale Solana's base layer in a unified, censorship resistant way to create this decentralized NASDAQ long term, without needing these things like ZK compression or these basically horizontal scaling. So while you talked in depth there about the now, how do we handle this perceived future of higher demand for crypto, for native assets on Solana, as well as just broad AI agents? Like, is this Fire Dancer, is the addition of this client going to work? Is that just going to be enough? Well, like what do you foresee? And are you just going to be against horizontal scaling because we can just do all the execution on the base layer? Or is there something, is there a different future that you may see here? I'm just trying to pick a bone because I think that it's an important conversation.
Redstone is DeFi's modular oracle, supporting over 100 clients on over 50 chains and offering 1,000 assets. Redstone is the leader for Bitcoin staking and yield-bearing assets. They offer the most robust, customizable price feeds available in any model. Join the Redstone exhibition today.
Welcome aboard on our journey into the singularity. This is the Endgame roadmap for Frax and Fractal, the new L2 out of the Frax ecosystem that is totally based on fractal scaling. Fractal is a modular L2 blockchain built by Frax with modular and fractal scaling in mind. Fractal scaling is based on the Mandelbrot set of fractal images, and it explains how L2s become L3s and the entire app chain lifecycle goes through its evolution. The Frax ecosystem is made of some of the top builders in the space and has stemmed from its OG days of the Frax stablecoin. It is now in the LST space, the LRT space, and this Fractal L2 joins the existing suite of Frax products, including Frax Swap and Frax Lend. You can see Frax Ferry, the bridge to go from any chain, Arbitrum, Optimism, or mainnet into the Fractal mainnet, bridge your tokens, and bring your Frax assets into the Fractal ecosystem. Join today to get the best out of Fractal. You are still early. Join today. Take part in our expedition into the singularity.
So I would say like there's actually not too much of a difference in how, let's say, the roll-up centric roadmap scales versus how Solana scales. It's you can actually basically do the exact same thing on both. The question is whether that's integrated within the same system or whether it's outsourced, or the parts are, it's kind of like if you contrast building an Apple computer to a Windows computer, right? With Apple, you don't have choices. You have to use their unified memory. You have to use their chips. You have to use all these things. With the Windows, it's like, well, maybe you can get some part from Dell, some part from Intel, some part from some other thing. And maybe that's analogous to like you use Ethereum for the computer part, maybe you use an L2 for the RAM part, execution, and then maybe you use a DA layer for that's custom, between Celestia, Avail, Ethereum, Eigen, whatever. But you don't fundamentally ever get around the actual limits. And the ultimate limit is bandwidth. Like, it doesn't matter what architecture you have, that is always going to be the limit. And so, like, for example, let's take Base. Okay. So Base is an L2 and it helps scale execution on Ethereum because you take a bunch of transactions, you do them on Base, you compress them back, you roll them back up, and then you post them on Ethereum. Now, the problem is, okay, what happens when Base gets overloaded, right? Because fundamentally, now Base needs to keep increasing gas limits, okay? But Base does not have, for example, local fee markets, which is to say that, let's say in your AI agents example, let's say one of the agents is particularly popular, right? That particular agent is now going to make the fees for everybody else that are trying to transact on that chain higher. And so, okay, what does Base have to do? Well, they can do two things. And I asked this Jesse on my podcast. They can either isolate the hotspots directly on the sequencer, right? So local fee markets, parallelization, or they can use L3s, right? Which is because L3s are basically the same concept where you're offloading it again, you're kind of sharding in a sense. It's not actual sharding, which is fine. I think that's valid. But you can also do that without needing an L2 or an L3, right? So if you have the local fee markets and the extensions directly on the L1, that's also the same thing. And so the difference becomes, and I think this is actually the crux of the modular versus monolithic thing, which is, I think, sovereign block space. That's what I really like about modularity, which is to say, like, it's not necessarily monolithic versus modular. It's actually much more about app centric versus general purpose centric, right? Because you can have modular with different L1s, right? Like the Cosmos SDK, or Commonware from Patrick from Avalanche. And the one thing is, like, okay, what use case? And so you must work backwards from the use cases. So imagine you are an indie developer, a game developer, and you want to build something that, posts game transactions on chain at some interval. You don't really need Solana for that, right? Like, what is Solana? It's a giant global state machine. It doesn't really have any of the properties that you really care about. You can easily use your own app chain. You can use your L3. You can use your L2. That's app specific. You can use your app chain. You can use your L1. And so then it becomes an exercise of, when you work backwards from the use cases, which solution actually best fits the business needs of that business, right? If it's something like order books, for example, perhaps it's better on Solana, or perhaps it's better on an L2. But then now you can have the same problems on the L2, which is the execution hotspot problems. But then also you're gonna have the same censorship resistance problems. And the way to get around that is to actually have a bunch of different nodes everywhere, and maybe multiple concurrent proposers, such that you end up actually kind of arriving at the same problems, right? And this is actually captured at a high level actually by Vitalik's blog, Endgame, which is to say that perhaps most blockchains actually look pretty similar in the end game. The question is, how do you get there? And that question is extremely difficult to answer because it's completely dependent on the use cases until whatever that end game looks like. So, for example, assume that let's say NFTs are like the next big thing for the next 5 years, just as an example. Perhaps they just all go to abstract chain, right? And perhaps that's like 90% of all crypto users today. Okay, it doesn't matter if Solana is superior at that point in any scalable fashion because the users are using the NFTs on abstract chain. Okay, and so by the time that everybody gets to the end state, then abstract has already built a moat around state and distribution, right? And so that's the actual question to me, because the scaling part actually nets out to being pretty similar on all chains. And I think within like 5-10 years, all chains will be scalable anyways. And they will have methods of dealing with elastic demand, whether it's Near's L1 sharding, whether it's Ethereum's L2 roadmap, or whether it's Solana's kind of state machine or Sui state machine approach. So I think they all work. The actual question is a business question in my view, which is which use cases and what do those use cases need?
Yeah, I think we are in agreement that there's a broad convergence here of design philosophy at the end of the day. I mean, it looks somewhere in between, in my view, somewhere in between like where Celestia and Solana are like heading. And now one thing that you put out, which I thought was triggering for the Ethereum community maybe, is that you think that Celestia will basically have a large amount of growth of rollups, or I think it was like win a lot of rollups next year, or kind of grow their rollup ecosystem potentially. Now, unlikely more than Ethereum, but they'll have a strong run. And I know that we also are in agreement here that this purpose built is how I like to call these chains now, or these purpose built or use case specific, domain specific execution environments are in sovereign block spaces is kind of how you called it, enables this customization that you don't get in the general purpose environments. And I think that's one thing that is super important for scaling applications to max throughput, as well as just for differentiation of use cases, right? Some financialized use cases have different security preferences, gaming, et cetera. There's just a lot of different use cases that can be built on different tech. And I mean, it's honestly like the onus is on us for education and on builders to be able to understand the technology and build it where they think it's the best fit. But coming back to this specific tweet, I view this like modular thing as partially being like, okay, we build out specific use case chains. So Celestia in this case is strictly just for DA and eventually for verifying ZK proofs to enable interop. Do you like I guess the question is, what triggered that tweet, and how does that tweet with regards to Celestia's potential growth for their rollup ecosystem, how does that relate to Ethereum and Solana? Like what triggered that, and how do you see these three kind of players in a basket of kind of use cases, or what the vision is for kind of what they're trying to build?
So what triggered that tweet is I always put a business or market lens on everything, and then combine that with the tech, as opposed to kind of just working out where's in the tech. And I was basically thinking, okay, so what needs to happen on Ethereum for, let's say, sufficient value capture is, well, first blobs need to enter price discovery, and then the L2s need to capture users, right? So those two things need to happen. But then those L2s, like, okay, assume you want to build a rollup today. Let's say you have an app and you want to build it into a rollup. Okay, so what do? Do you deploy on base? Well, perhaps, but then you're going to have the same problem as Solana where you're kind of leaking some value, right? Okay, so then what do? Do you launch an L2 on Ethereum? And it's like, well, perhaps if you really care about the assets on Ethereum, right, and you want trust minimized bridging or something and extending those assets to the L2. But if you look at it from a market's perspective, right, there's a lot of L2s on Ethereum that are very strong. There's Arbitrum, there's Optimism, there's a bunch of shit on Optimism. There's ZK Sync, there's Starknet, there's all these different things. And so then it's like, okay, wait a minute. And by the way, all those guys have roughly different incentives. Like they have some unifying incentives, such that like it's to scale Ethereum and all these things. But from the business perspective, they have different incentives, which is why interoperability seems to be harder than it actually is, because fundamentally capitalism kicks in. And you've seen kind of Vitalik's tweet about this, right? And so then if you're an app and you want to build an app chain, okay, so what other options do you have? Well, perhaps you can build an L1, but that's a whole lot of shit and takes a lot of effort. Or you can go to the chains that are purpose built for this reason, where it only exists for this reason. There's no other kind of weird things to distract your users or have kind of misaligned incentives where, let's say this other L2 wants a different interop standard, and then Polygon wants ZK egg layer and all these different things. And so on Celestia, it's just like, you don't want to, as a business builder, you don't want to go to an already big market, right? Which is a counterintuitive thing. You want to go to something that is relatively small, but on the rise up and fast growing. And so then if I'm to build a rollup, I would probably go on Celestia, right? Because first of all, I can work closely with the Celestia team because they need to support these guys because they are behind Ethereum. But then also they have a much more clear vision for helping rollups versus Ethereum also does, but it's also bundled with some other things. And then there's the argument like, okay, if the L2's main, and this is like what John Sharp would say, which is like, L2s are good on Ethereum because Ethereum has a lot of valuable assets on the L1, and you want to be able to kind of extend these assets. Okay, where else is that the case? Bitcoin, right? In fact, it's the most valuable asset. And so perhaps then you think of extending these assets to enable better finance. Well, you can also go to Bitcoin. And because what's the alternative? The alternative is you compete on some level with Arbitrum and Base, and that's hard, right? Nobody just starting out probably wants to do that. So that was kind of what triggered it for me. And then like, it really depends on the type of rollup, right? I actually have been a huge fan of Base rollups since the day that the forum post went live, because I tweeted something about like sequencer censorship, and then Cnode replied to me and linked me the post, and I was like, oh, what the fuck? And then it came out that day. And so I was like, wait, but this would also make quite a lot of sense on a blockchain with very fast block times, right? Like, so Solana is currently 400 milliseconds, but it's going to go to 120 milliseconds. And so you can have a really good experience where there's a base rollup on Solana and the sequencer is the chain and it's super fast anyways. And so then it becomes the same problem that I just described in the previous answer, which is what are you building and what requirements do you need to satisfy, right? So that's.
So, but isn't the problem for Solana with regards to like a base roll construct, or like the reason why that you guys have built the ZK compression because the DA, like Solana is just not meant for DA basically. So would that actually work, or like how, like, because we have Bullet and Ellipsis are two of the prominent ones. I think Zeta Market also has launched in this kind of structure, differing structures. But from my understanding, the bottleneck for Solana, like for rollups, is or these types of like constructs, is the DA. Like, how does that work?
Well, for Bullet, which is the Zeta team, they're using Sovereign Labs, and actually they're using us. So we're working with Sovereign Labs to like, okay, so to see how much we can push this thing. Like when you are posting these different blobs to the L1, what does that look like? How fast can you get it? And Solana's not designed for like DA, right? At least in the way that something like Celestia is optimized for it. But since it's optimized for the other thing, which is syncing information as fast as possible, it already has a pretty good DA layer on its own, even with like basically no focus on it, right? It's kind of similar to Ethereum, where before blobs were added, people would just store it in the call data. And like, that still worked. Now, it wasn't a perfect solution, but it still worked. But since Solana is already much more scalable than Ethereum, the base layer, then the call data approach actually also works on Solana. And the difference here is going to be the core devs, right? Like on Ethereum, if they're like, wait a minute, our customers are rollups. And so what we need to do is we need to build the L1 in such a way to serve as the main supplier for these rollups. Versus Solana is like, no, like our main customers are not rollups. Our main customers are people who want to transact and have execution here. And so we're not going to build anything purpose built on the L1 level just to support these rollups. But if you think it's useful to use our fast block times for something like a base rollup, then perhaps that might make sense.
Yep. And I think that's like that is the big question mark for Ethereum. It seems like very clearly Bitcoin is very clearly this store of value, this gold, digital gold. It's very clearly, maybe they build out a ZK verifier on the L1 and a trust minimized bridge, and that we get OPCAT, and we get a different ecosystem in the future. But for now, it's very clearly like what it is. Solana is also just very clear, execution oriented. Let's scale this on a composable base layer. Celestia is very clearly opinionated in the sense of like, we are just building the base layer just for rollups, the most optimized base layer possible, single slot finality, etc. And then Ethereum is kind of like in this place where it's kind of trying to do a little bit of everything of all three of those. And so it's going to be particularly interesting. And I mean, there's been endless podcasts about this conversation as of recent, so we don't need to get into it too much. But like, it's going to be interesting over the next couple of years to see how Ethereum kind of fights this little war that it's in, of basically positioning and like what engineering resources need to be allocated where. Because basically, I think Ethereum will end up trying to do kind of all three, but it won't ever be able to do all three, in my view, as well as those who just focus on the one. I mean, that's just a very clear idea, like specialization wins.
One thing I'll point out, and people think I'm like super anti-Ethereum or something. That's not the case. I'm anti certain social layer industrial complex people from Ethereum, but the chain itself is just technology. I have nothing else to piece of technology. And so there's actually an argument to be made for fighting all three battles, because like in business, what might happen is if you focus like you can take Intel for an example. In when Intel used to build memory chips, but then the Japanese people started outperforming the shit out of them on memory chips, right? But then they were already kind of somewhat doing microprocessors in the back end. And then they're like, wait a minute, why don't we just use microprocessors and then really scale that out? And so there's also something to be said about fighting multiple battles, because we don't know what the next year, 2 years, 3 years, N years looks like. And so there might arise an opportunity where that chaotic approach might actually yield better results because you have more stuff to work with, versus like, let's say the future is just like nobody wants to do execution in L1 for some reason. Now, I don't think that's likely, but just give it as an example. Well, in that case, what's Solana going to do, right? That was their one bullet in the chamber. And so now there needs to be a pivot. And while I think the verticals are set properly, such that Bitcoin goes for value, Celestia goes for DA, and then Solana goes for execution, it might be the case that there is some combination of those that Ethereum will still do much better. So I don't actually think it's all bad.
Yeah, it's properly hedged, and I mean Ethereum has such an advantage in every one of those categories effectively in terms, and then on top of that, users and liquidity. But nonetheless, it'll be interesting to see which of these components the market values the most over the coming years, and then how each of these teams specifically kind of lay out their future groundwork for that reality. And that's the beauty of being in a market. Cool. Okay, so let's pick on Solana some more, and talk about MEV, which you've already done ad nauseum on Twitter and on Lightspeed. You had a really good pod with Toli, which you were kind of the question asker, but it's becoming more and more apparent in different realities. And I think one for me that's hit is like not setting the slippage perfectly on Jupiter, or accidentally doing like auto on like a low cap meme coin, and then getting hit with like 10% sandwich bot. If you look at Deck Screener, the order book is filled with sandwich bots. The reality is we're also calling this a mechanism of value for Solana. We're using this as a way to basically describe the network effects of Solana's L1. Now, one thing in particular that you've been bringing up is this idea of REV, which frankly, I'm still trying to wrap my head around this a bit. So maybe you could just give us a quick lore of like the MEV on Solana, and then what is this REV concept, and how is Helios involved in this? And just, yeah, what's the latest here? And should the community be worried about the situation of MEV on Solana?
Yeah, so you can think of REV, which is real economic value, let's say, as basically how much money the validators make. And as a result, how much the stakers and the token holders make, and the L1, right? So basically revenue is kind of how you can think about it. Now, the way it works on Solana is, as a validator, you can make money in 3 ways. One is obviously just issuance, right? Common to all proof of stake chains. Number 2 is priority fees, right? So people, there's they want to land their transactions, prioritize them, so they pay a small fee for that. Or there's MEV tips, right? So Jito tips. And the interesting part about the Jito tips is that like 80% of them are actually just for landing faster, right? Or like sniping a liquidity pool. I believe Ghost, which is like an indexing team, did an analysis on this where it was roughly like 8 to 9%, 7%, something in that range of the MEV tips were for sandwiches. And so if you take that into the whole context, the sandwich contribution to total REV is single digits. Like it's relatively small. Now that's not to say it should exist, but it is, to just put it into context. And so what's been happening is these TG bots, right? Like I'm not going to name them, but there's a bunch. What happens is you have a shitcoin, okay? And that shitcoin just launched, and people want to buy that shitcoin as early as possible. But the problem is the shitcoin is like a 50K market cap, okay? And so that is to say, the price of the shitcoin might go up by like 100%, it might go down by 100%, and it usually does. By the time that your transaction even makes it to the blockchain. And as a result, if your slippage is like super tight on a shitcoin, it's the same thing as like a reverted transaction on EVM, right? Like it makes it to the chain, but then you don't want it to execute because it would be at a ridiculous price. Okay, so that's like almost all the sandwiching happens from those TG bots and those users just setting a wide slippage so they can just buy the coin, because the math that they're doing is like, I don't give a shit if I get like the worst execution by 20% because I'm buying the shitter in the hopes that it goes up 5 billion X, right? That's the math they're doing. Which, you know, like there's certainly a lot of improvements there to be made. Now, the recent MEV talks that have happened, everybody is getting this wrong because nobody understands how MEV on Solana works. So what's happened is, Ethereum has a mempool by default on the L1. Solana does not. And so what used to be the case a year and a half ago is Jito, who does MEV infrastructure, it's a validator client that all validators run to boost their revenue. It's like MEV boost on Ethereum, for example, kind of. They had a global mempool. So they basically added a mempool to Solana, and sandwiching started picking up then. And so what Jito did, and I was me and John Sharp were like roughly the only ones against this. Jito shut down the mempool, and I was like, oh fuck, why did you do that? Like, that's just going to make sure that some bad actor gets a private pool going and then starts sandwiching retail, but then none of the L1 actually benefits from it. Like, it's not democratized. So that worked for a little bit, like, I don't know, 6 months, maybe 5 months. And then what happened is there's a bunch of dark pools on Solana where they have like these side deals with these validators or like these rich whales from Asia or something. And they leak transactions and then they sandwich people. But then the revenue from that, it doesn't go to REV. So this is where everybody gets it wrong. That sandwich revenue does not go to REV because it's not in protocol. This is completely a side deal. So in addition to the REV, there's these dark pool sandwichers that take those profits from those slippage from the sandwich attacks and then distribute it to like this set of, let's say, 5 validators. I don't know the exact number, which is bad because if that keeps happening, then that pool keeps getting bigger and bigger until it's a centralizing effect and then it just compounds. Now, the question that I've been asking is like, okay, what's the rate of growth, right? If let's assume these people are 0.3% of the network today, So Helios is the number one validator, and we are 3.26% of the network in terms of stake. And that's roughly 3.1 billion in SOL in USD. And so then the question is, okay, these dark pools, how fast are they growing? Are they going to become a centralizing force in 5 months or 5 years? And nobody has data on that. And actually, the data seems to suggest that it's actually going to be a very long time, such that that's a problem. Does that make sense so far?
Yes, it does. I'll let you continue, but yeah, we're all good here for this initial point. Just some questions about like whether these dark pools are basically then distributing the revenue directly to themselves effectively, like their own nodes that they're running. Yeah, okay. So that's why it doesn't contribute basically to the REV.
Yeah. So like the interesting part of this is that like there's a very easy way to eliminate it, which is Jito enables the mempool back, because since 90 X% plus of the network already runs Jito, then most of the network would also, it would democratize the sandwich just so everybody would extract the same amount. And so actually total REV would go up quite a bit.
Yes.
But it would come at the expense of more sandwiching.
Whoever's doing this.
Yes.
Well, they would also lose the money. These dark pools would also
Yes.
lose the profits, and then there would be more sandwiching on the main on any other transactions, because they would just be doing it on everybody basically, or on every transaction that hit
Correct.
any validator.
Right.
And so why doesn't Jito just turn this back on? Because of this reason then.
Yeah, so because then the math is something like, okay, is the rate of growth or is the centralization concern from this small dark pool worth everybody getting sandwiched more on the network, right? That's not an objective question.
Yeah, it's a tough one.
Yeah. And so to answer that properly, you need to really understand what's going on with the rate of growth. And you know, that's still a discussion that's being had. But then also there is a bunch of other mitigations that are possible on the app level, right? One of the things that certain people on Solana would say, and that would be me included, is like, we also don't want to like just straight up give up this fast, because we know what happens when you play this out. It ends up looking something like Ethereum in its current state, which is not like horrible or bad by any means, but it's also perhaps not ideal. Or if it's, maybe there's a better way, right? And so then it starts to look like, so Ellipsis Labs, which is also launching in L2, released the sandwich resistant AMM. And so, okay, what if Radium now uses that, and then Pump uses Radium, and so they use this new thing, and so maybe that reduces quite a bit. Okay, what happens when there's a team called DFlow, and they have something called conditional liquidity, which is kind of like intent-based trading? That would also reduce it at the app layer quite a bit. And then what happens if the transaction pipeline on Solana, which still has quite a few bugs, is optimized such that you actually can land the transaction that fast before the price moves, so you can actually reduce the slippage at the app layer? And so you do those three things, but then you take into account that you can just enable the mempool back on. And then the final state, of course, of this is multiple concurrent proposers, right? Where you incentivize competition at the block leader level. And because right now there's no competition, the L1 leader, they might sandwich because they have not unbundled the bundles or something. But if there's competition and the block times are reduced, that starts to also really minimize MEV or malicious MEV quite a bit. And so it's certainly a very dynamic and chaotic problem. But the one thing that I took problem with, let's say, is people conflating this with REV. REV just refers to priority fees plus Jito tips, but most of those Jito tips are not towards sandwiching. And the sandwichers, the actual problem there is they're making money to the exclusion of everybody else, such that they could become a centralization concern later. Yeah,
which is a massive, massive issue. But the question then becomes, how big of an issue is it compared to the reduction in UX as for everyday users across the entire chain, as well as the other kind of slew of dynamics that you laid out? Well, what would be particularly helpful here would be clarity into the dashboard, or into the information as to what that centralizing force really is, extrapolated over time with varying degrees of like growth or decay, basically. And so being able to kind of see some of that information, I think, would help the community make a better decision, ultimately Jito. And then would this Jito, would this be a vote? DAO thing, a governance thing, or would this be like a strict engineering thing?
It would, I think it'll depend on some business considerations and legal considerations on their end. So I don't know the answer to that. I mean, obviously you can do it either way, but like what minimizes the externalities for Gito, the team, right?
Exactly.
That's
yeah.
the question. Based on, so we are running the numbers on this and we should have like a report pretty soon.
Cool.
Based on what we've seen, it seems like the rate of growth is pretty slow. Like it would take a very long time, and keep in mind that everything about the market would have to remain constant, and nobody would have to nobody would make changes for this problem to keep going. And I don't see that happening. So like, it's not as bad as like MEV is a problem and it needs to be mitigated, but it's not like this thing that will destroy the chain within 5 months, for example. It's more like, okay, if this keeps going unmitigated on all fronts, app, protocol, education, all this shit, data, then yeah, it's a problem, but that's not going to happen.
Yeah.
Right. Like, because we're on top of it.
Yep. Good, man. Good stuff. Really great conversation. Really enjoyed this and appreciate you coming out. I've been super excited about Solana for the last, I mean, really turned my head maybe like a year ago or so, and gotten much more involved during 2024, and been very pleased with the user experience and just the community growth and what's been going on. Excited to kind of have this vision of pushing execution to the max, and really trying to see what we can do with that. And I think one big thing there is the beauty of crypto and DeFi and Web3 is like this composability. So maintaining that at scale, I think that's a very important part of the Solana vision, and something that Ethereum, Celestia, and these other kind of more modular or more like roll up horizontally scaled ecosystems are working to figure out as well. But ultimately, I tend to agree on the convergence of design. Really good points on PENGU. I appreciate the explanation there as to what's been going on. I think that the community would appreciate that. And yeah, man, looking forward to running this back. Appreciate you coming out.
Awesome. Yeah. Thanks for having me on.
Cheers, buddy.